Hi, everyone. Happy Wednesday. So, today we're going to talk a little bit about planning for the next year. We're entering into Q4, and of course, the thoughts are on wrapping up the year, but also planning for the next year. So, just a few important, very notable things that we wanted to make sure that we talked about was going to be on the wage increases and what we already know about and also what we're anticipating for the next year. So we already know that for New York City, Long Island, and Westchester, starting next year for January, we have the wage increase from $15 an hour where it is today to $16 an hour. Then in 2025, that's going to increase to $16.50. And in 2026, that's going to increase to $17 an hour. So outside of New York City, Long Island, and Westchester, the numbers also increase. But because they're lower today, starting in January, it's going to be 15 there. And then it starts to balance the following year, meaning that in 2025, the entire state will be on a minimum wage of $16.50. And in 2026, the entire state will be on a minimum wage of 17. So it's just this last year where we have that $1 difference between what we have in New York City, Long Island, Westchester, and what we have in the rest of the state. So it seems that the purpose of this was to really play catch up. And so when our governor signed this bill, she actually made mention of that it seems that it would be too high of a jump from where the rest of the state is, rather than New York City, Long Island, Westchester is already at 15, and so it's a smaller jump. With that being said, we understand that dealing with business owners every day, that it seems like a rather incremental jump, but it actually is not. When you factor that in with payroll taxes, when you factor that in with overtime, it's most certainly not just a small jump. It's a very concerning amount, especially when you have more and more employees. And so it's something definitely to plan for going into next year. And so that's why we bring this up now in terms of planning for the year. That's something that absolutely should be a part of the new budget, because you'll have to make sure that you have accounted for that wage increase. In addition to that, there's going to be an increase in the threshold number, so that minimum number of what is acceptable for an exemption for overtime. If you're a administrative or an executive employee, the threshold under the New York Department of Labor has increased as well. So it was at about 58,500 this year in 2023. And now moving forward into the following year, it's going to be 62,400. So that's something to keep in mind, that any employee that you would like to keep that would match into the administrative or executive position, and you'd like to make sure that you keep them as that exempt, not only needs to sign a new wage notice form, but also needs to have their minimum wage increase to match what the new minimum is, which is that 62,400 number. There's also a few other labor law exclusions that we have pending right now, a few other bills that we do also have pending for purposes of the wage theft and notices and so on. We are waiting to get a little bit more information on those, but that's also something that we're keeping a lookout for. So please stay tuned on those. That would change, obviously, and most likely upward. So some considerations for next year. And Jane, I wanted to ask you, just how are you preparing? How are your clients preparing for the wind down for 2023? And how are they preparing for the next year in budgets?
Thanks, Irene. So everything you've discussed today would definitely make into the planning for next year and looking over at 2023. So the first thing we look at is kind of looking at actual versus budgeted. And if some of our clients don't have a budget, this is really a great time to start preparing for one. Like you said, increased wages is going to significantly make it into a different amounts throughout the year. So hopefully there is the profit and income that's going to be significantly increasing as well. So one of the things we look at is a trend over the years. So basically we want to look at the sales amount and how the business is doing throughout the years. You could also take a look at per quarters or months. So you could see what is your low, what is your high, because some of the, businesses are rather calendar based. So, there's highs for restaurants, there's lows for restaurants. So this is something we take a look at. And what helps with that is also the cash flow management, right? So if let's say you're anticipating that in August you might not have as many customers, right? People are away, but let's say November, December is going to be high peak. So we want to make sure that we have enough cash flow for the low months as well. And another thing we definitely look at is profitability ratio. So we look at variable cost of goods sold and cost of labor, and we look at fixed expenses. So this is some of the things that make up that profitability. And also another thing that I really like to look at is the growth. So we look at EBITDA, which is earnings before income tax, and we compare it to the operating investment. So we want to be in this efficient gain and the quality growth. We don't want to be in the decline. So we look at that over the years. And then really the tool that we started to implement a lot these days is forecasting. So there's different drivers that we could set up, and that could be influencing and determining the financial results. And we look at sales volume, price, customer retention, productivity, or quality. So depending on the business. So we want to basically create control over the forecast calculations. And by that, we'll look at the data that's specific to each client and making sure that they get the proper forecasting and proper budgeting that could help them look at their years in the past and help prepare for any kind of down or up and know what to expect the next year to the best of their abilities, right? Obviously, we all know this is not actual. The only actual data is sort of in the past, but we do want to help with the future forecasting. So all of these things you talked about today is definitely something to consider and continue to kind of make the best assumptions for the future. So
So
as always, if you have any questions, don't hesitate to reach out to us. Thanks.
thank you.